Advances far outstrip declines as heavyweights inch up and mid-caps continue to rally. Strong gains in the US overnight on easing inflation aid the move. Realty and utilities gain while FMCG and consumer durables are the big drags.
HDFC Life, among the biggest gainers today, jumps after it beats margin estimates and holds on to its growth guidance. Analysts bet on its margins bottoming out, though they remain wary of possible regulatory headwinds.
Hindenburg Research is set to disband and wind up after running through its pipeline of ideas, says its founder Nate Anderson, who is looking forward to focusing on other aspects of his life. The news triggers a relief rally in Adani Group stocks.
5 years after it stopped daily repos, the RBI has restarted it to infuse liquidity into the market. The return of this much-needed liquidity crutch, along with lower than expected US CPI, has pushed down the 10-year yield by 5 basis points and revived hopes of a February rate cut. The rupee, however, remains under pressure despite a fall in the dollar index. A bounce back was imminent and a bounce back has come by. 23,300 is where we are at the Nifty. The Nifty mid-cap index doing a lot better. So last 2 or 3 trading sessions, we've seen more green than red despite all the volatility. I'm Mangalam Malu, with me Hormas Fatakia. The proof of this pudding will lie in its eating towards the expiry. We have the second half, which will be extremely crucial, Hormas.
And an action-packed second one is the action-packed second half as well, Mangalam. Is not only the weekly expiry, but once you call shutters on today's trading session, we have 3 very important earnings lined up today. The index heavyweights, be it Reliance Industries, Infosys, Axis Bank, all of them coming out with numbers today. And that perhaps is one of the reasons why there is still a bit of a cautious tinge, even though we are in the green, but we have not had a blowout move as we saw on Wall Street last night, still continuing to hover around that 23,300 mark. More importantly, we are above the November lows of 23,263. That was the first level that the index had to cross in order to move further higher. So 23,300 is where the index is. The broader markets, though, are continuing the way they have over the last 2 trading sessions, be it the mid-caps or the small-cap indices. The mid-cap index is up 1%, as is the small-cap index. They too cooled off a little yesterday in line with the way the benchmark index moved. But today, they are firmly in the green as compared to the benchmark indices. But we have been focusing on the disinvestment theme over this week. We spoke of PSU banks earlier in the week, and now it's on IDBI Bank, and Sapna is joining in with the latest update on that. Sapna, tell us more.
Yes, Urmo. So what we are clearly given to understand is that the government is still sticking to its target timeline of March FY25 for receiving the bids, the actual financial bids for IDBI Bank disinvestment. Basically, just as a quick background, there have been reports, indicating that since the due diligence is currently on, it may not be possible for the government to receive the bids in this year, and hence the transaction gets, kind of moves forward to the next financial year. But some clarity has come in indicating that, the March timeline is still very much on in terms of actually receiving the financial bids. Now, this clearly indicates that sometime soon, maybe next month, the government may be in a position to call for these bids. Definitely, the due diligence for IDBI Bank's disinvestment is still on, and it started some time back. And that's the normal process for any privatization, transaction. Having said that, so the timeline for receiving the bids is intact, absolutely intact, clearly indicated. However, in terms of closing the transaction, in terms of formality, that may move to the next financial year. But obviously, Hormas, what we are all interested to know is who are those potential bidders who will actually get to buy the stake sale on the part of LIC and government. And those bids are to be received in the month of March. There is a clear indication on that. Hormas?
All right, we take that point, Sapna. Thanks a lot for that. IDBI Bank has been flip-flopping over the last couple of trading sessions, was under a little bit of pressure, but back up again today on the back of what Sapna has just reported. We'll keep an eye out on this itself. But let's also focus on some other stocks on the move. The biggest one today has been HDFC Life, up over 10% in today's trading session at one point in time. Now still holding on to gains with about 9% so 3% off highs, reacting to its third quarter earnings. Yash joins in with the fine print of that. Yash, the margin compression is a lot less than what the street anticipated.
Well, certainly a strong quarter for HDFC Life Insurance as far as the third quarter is concerned, and what that is doing is, making investors believe that other listed life insurance companies as well could have a strong Q3 as far as financial performance is concerned. To be specific about the numbers for HDFC Life Insurance, except for new business premium, which saw a slight miss in terms of street estimates, all other parameters, total APE, retail APE, value of new business as well as margins were much ahead of street estimates in terms of specific numbers. For new business premium, despite that slight miss, it grew at about 11% to come in at about 7,900 crore rupees. Total APE grew at 12% at about 3569 crore rupees. Retail AP again saw a growth of about 12%. Value of new business grew at about 9%. The number there was about 930 crore rupees. In terms of margins, the street was estimating a higher compression to come in as far as margins are concerned, but the company could restrict it to a much lower number. The margin saw a compression of about 74 basis points to come in at about 20.06% versus 26.8% on a year-on-year basis. The management has maintained its guidance for the year in terms of 18 to 20% of APE growth and more than 15% of VNB growth. What also helped the stock price today is valuations. The stock had corrected significantly in the last 3 months as well as in the last 1 month. HDFC Life was down about 19% in the last 3 months and about 8% in the last 1 month. Also, what is helping the stock price today? In terms of brokerage notes, HSBC and Jefferies both have a buy call on the stock with a target price of 750 rupees per share. CLSA has an outperform call on HDFC Life. They've trimmed their target price to about 690 rupees per share.
Beating muted expectations, brokerage is upbeat, a perfect recipe for the move that you're seeing in HDFC Life. Yash, thanks a lot for that. 9% higher on the stock, the top gainer on the index as well. The biggest single-day gain that the stock has seen since April of 2020. The other one that is doing well today is Paytm, and that is buzzing today on the back of an MK note. Abhishek is telling us more about that. Abhishek.
Well, MK has upgraded Paytm to buy from at. They have increased the target price to about 1,050 per share from 750 that they had earlier. They say that the recent NPCI approval in October 24 has released a major regulatory overhang on the company. So this should help the MTU base get built up again over the next 12 to 18 months. The cross-sell retail financial products like home loans, insurance and wealth products, that will help in improving the revenue per customer or per user for them. So Paytm may be on early path to profitability by FY26, post which profits will keep on increasing as per their estimate. They also say that Paytm's cash to market cap ratio is at 21% when compared to 5% for Zomato. Now this provides strong margin of safety for investors. So additionally, a further easing of regulatory stance via potential approval for payment aggregator license, that could be another positive catalyst as per MK for Paytm. Back to you.
Abhishek, thanks a lot for that. Paytm up around 4.5%. Meanwhile, keep an eye out on Sun Pharma. They've made an acquisition via their arm Taro. It's a Canadian company that they've bought. We'll just try and get more modalities of that acquisition, what it does to their overall portfolio, the kind of monies that they will be paying for that as well. But the street seems to like that. The pharmaceutical stocks have been in focus, recovering from lows. Currently, Sun Pharma, ahead of this news, had recovered from the lows, currently sitting with a gain of almost 0.25%. So we'll just get some more details on this acquisition. Hormas.
They're calling this a strategic investment in a pharma company, and the turnover of the company that they've acquired is nil. So it seems to be a strategic investment. It's not a related party transaction. They're expecting it to be completed before the 7th of March, and it's an undisclosed sum. So they've given a cash consideration, yes, but how much is going to be the cash consideration is something that the company has not disclosed.
Maybe some capabilities that they are buying off that company since it's pre-revenue, strategic investment out there. So we'll keep an eye out on that. But the other stock that is reacting to its third quarter numbers is L&T Tech. This morning we spoke with Amit Chadha, who's the managing director and CEO of the company, as well as the NASCOM Executive Council member regarding the company's third quarter performance. Listen in.
Our pipeline is better than what it was the same time last year as well as last quarter. If you look at the number of deals we've closed, this is the highest number of deal wins that we've had in the recent past. As I see today, the demand environment is definitely better today as opposed to the same time last year. I see the pipeline to be a lot bigger than what it was same time last year. or 16.2 that we've got. And I do see quarter 4 EBIT coming in at similar levels. In fact, the Q2 operational EBIT of 16.2 is after 100 bips spent on increments in the current quarter for the employee base. Medium term, we are reiterating our aspiration to get to $2 billion and 17 to 18% EBIT levels.
The management there of LTTS at the stock doing very well for itself as well. By the way, just going back to Sun Pharma for a bit, the acquisition that they have done through Taro, Antibay Therapeutics, now that is currently being managed by a court-appointed receiver, and that receiver is authorized to carry out the sale of Antibay. So it almost comes across as if it's an NCLT sort of an acquisition, a resolution of sorts, and they have been asked to not disclose the consideration until the acquisition is complete. So once that's done, is when the company will make the disclosure. March of 2025 is where Sun Pharma has shared the timeline for that. So keep an eye out on the stock at the highest point of the day now. Taking a short break, but before we do that, it's time to dive into Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. Now, this week, CNBC-TV18's Nigel D'Souza interviewed Praful Kulkarni, who's the founder of Alpha Leo Capital, to understand why traders must learn to avoid the noise in the market.
Any practical tips for the traders? How can they stick to their strategy and avoid overreacting to news?
News, I think it's a very important question, because most of the people overestimate their ability to judge the exact outcome of the markets to the news. Two things here. One, we need to understand that we don't have the capability to exactly judge what would be the possible outcome or how would exactly market react to the news. And the second thing is, we need to understand that we are at the bottommost layer of the information chain. By the time you get the news, understand that the game is already over, you are late to the party. And at the same time, since you don't have the capability to take such big bets and sit through the ups and downs, and you don't have the capability to exactly judge how the market's going to react, I would say retail traders are better off not looking at the news, and they would just have to stick to their strategy by completely eliminating the noise.
Welcome back. 23,300 is where the Nifty continues to remain, and it's almost a status quo, a flat line, if you can see there on the index. And all eyes will be on the index heavyweight, and that is Reliance Industries, that reports its third quarter results later this evening. Rima is joining in with the key expectations. Rima.
The key takeaway from Reliance's earnings this time will be the margin expansion or the EBITDA expansion. So despite a flattish revenue growth, the CNBC-TV18 poll throws up a near 8% expansion in the company's EBITDA, driving margins to 18.4% and driving about a near 7.8% increase in the company's profitability. So the key is going to be the EBITDA expansion this time. And what will be the drivers for that? One, the O2C business, led by refining margins, will see a pickup in the company's EBITDA. Secondly, this will be the second consecutive quarter where Reliance Jio, the telecom arm of the business, will do well, aided by the July price hikes. And even the retail is likely to continue to see an uptick in the EBITDA given the festive season sales. That said, the upstream EBITDA could remain under a bit of pressure, and that will offset some of the pickup seen in the O2C, the refining, Jio, and the retail business. So let's talk in a little bit more detail about the O2C business. Well, the first half of the year was extremely challenging for the oil to chemicals business. We saw the overall EBITDA decline. But this quarter, we're anticipating a pickup in the company's refining margins. Look at the Singapore GRMs. Singapore GRMs went up to about $5 per barrel in Q3, which compares to a $3.6 per barrel in Q2. So there was a pickup in the refining margins, and that will reflect in Reliance's O2C business. For Reliance Jio too, this will be the second good quarter for the company. So we're working with a revenue growth of close to about 4.8%, margin expansion to about 54%, driving a 10% increase in the company's profitability on a quarter-on-quarter basis. The key reason for this, if you remember, would be the July hike. So whenever there is a tariff hike, and in the case of Reliance, it was about a 15 to 20% tariff hike, it takes 2 to 3 quarters quarters for the full flow through. So even Q2 was a strong quarter for the company. That's the prior quarter, 7% jump in revenues. Their ARPUs went up by nearly 7.5%. And this would be the second quarter as the full pass-through takes place. So we're working with the ARPU expanding to above 200 rupees this time. But what you need to watch very carefully would be the subscribers, because last quarter the overall subscriber base declined by more than 10 million on a sequential basis. Perhaps as the telecom tariffs became a lot more pricier, some people dropped off. So does the subscriber base come down again? That's something that the street will watch. But remember, the stock has been a bit of an underperformer. So last year, Reliance Industries share price declined for the first time in 9 years, and it underperformed the Nifty in 2024. Brokerages increasingly over the last couple of days have started turning bullish as valuations are now looking attractive. They expect the oil to chemicals business to show an uptake. Even the telecom business is likely to see telecom, stable tariffs. Retail is showing a pickup. So brokerages are increasingly turning bullish on Reliance Industries. But will the numbers match up or beat? Time will tell.
Take that point. Thanks a lot, Reema, for that. Reliance has been a bit of an underperformer for the first time in a very long time, but ahead of numbers, the stock's well bid, up around 1%. And the reason for that could be perhaps some improvement that is expected in the retail EBITDA. From a revenue standpoint, there is some moderation, consolidation, which is expected on account of a couple of things. One, the prior pace of growth has been extremely strong. Secondly, the company had been making a lot of acquisitions and scaling all of that. And thirdly, the consumer sentiment itself has been weak. So YOY, the growth would be moderate because of the B2B business in the base. Quarter on quarter, there would be some support coming in because of the festive season. So if you look at the last 3 quarters or so, the revenues per quarter have been around that 76,000 crores. Third quarter seasonally strong, so we're expecting around 80 to 83,000 crores on the top line for the Reliance retail business itself. The key to track, however, would be there would be a 7% expected increase in retail revenue per square foot. That's Nuvama's expectations. And the other thing that we'll be watching out for, does that become, operating leverage positive or not? Retail EBITDA growth is something that we're keeping an eye out on. The analysts expect 1 to 2% growth year on year and 8 to 9% quarter on quarter growth on account of the festive season. We are expecting numbers of close to around 6,400 crores for Reliance's retail business EBITDA for the third quarter itself. That's a CNBC-TV18 poll. Apart from these numbers, just keep an eye out on the JioMart orders and the growth in new formats. They have Tira, Ustar, which is being fairly well bid after the value fashion business has seen some traction, and also aggressive footprint expansion by beverage. Campa are a bunch of things that we'll keep an eye out on. So that's as far as Reliance's retail business is concerned. Hormaz.
A lot of these brokerages also have been saying, right, that retail and Jio will be driving growth for Reliance going forward. So all eyes will be on Reliance and the various business verticals. So time for a short break. Just before that, EMS has won an order worth 105 crore rupees. The stock is on a 5% circuit now after that order win. Keep an eye out on that as well. Time for a short break then. On the other side, more earnings in store today. Axis Bank and Infosys, and we get you their expectations on the other side. Stay tuned.
You're also making investments in a whole bunch of startups. What guides the kind of investments that you're making into the kinds of companies that you're looking at?
I think I need to change that attitude of mine. I think I've saturated that whole, like I did in sports, where it was all about just passion and I want to do everything, to, okay, I need to set a system in place, and maybe I need to take a step back because maybe I'm becoming the speed breaker. What's really exciting me, and has been for the last 5-6 years, is the India story. Companies coming out of India doing stuff for India. Make in India is something that really excites me, because I think gone are the days where we look upon ourselves as being inferior. I think if not anything, we are the market leaders in whatever we do. And I love that renewed confidence within ourselves.
Axis Bank, that's the stock on our radar ahead of its third quarter earnings today. Abhishek joins in to tell us what the street is anticipating. Abhishek.
Well, it's expected to be a weak quarter for Axis Bank. Our poll suggests the NII growth on a YOY basis may be one of the lowest that you are seeing in last 13 quarters. Now, deposit and advances growth will be seen closely. Now, Citi estimates deposit growth of 11% YOY and 3% quarter-on-quarter, which is higher than the industry average, while they estimate, advances growth of 10% YOY and 2% quarter-on-quarter, which is lower than the industry average that we had as per RBI data at the end of December 24. So net interest margin may decline both YOY and quarter-on-quarter. Kotak Securities estimates 11 basis point decline in net interest margin YOY and about 4 basis point on a sequential basis. Slippage is expected to rise quarter-on-quarter. Again, Kotak Securities estimates a slippage of 5,000 crore versus 4,400 crore in the previous quarter. So asset quality expected to deteriorate. Citi estimates gross NPA ratio to increase by 20 basis point quarter-on-quarter and net NPA ratio to increase by 10 basis point on a sequential basis. Provisions can remain elevated, thereby impacting the earnings momentum. Again, Kotak Securities estimates 198% gain with respect to provisions rising on a year-on-year basis and 5% increase on a sequential basis. Near-term, loan growth outlook and deposit growth outlook will be seen closely. Deposit is becoming a challenge for the sector. Our poll suggests NII growth of 9% YOY and about 1.5% sequentially. We are working with a profit growth of 3.5% YOY and a decline of more than 9% quarter-on-quarter. Back to you.
Abhishek, thanks a lot for that. Keep an eye out on Axis Bank. The stock is up over 1% today. Was one of the big drags in yesterday's trading session, ended at the lowest point of the day, and that was one of the key triggers, while the Nifty too ended off the highs of the day in yesterday's trading session. Here too, it's off the day's high, but still holding on to gains of 1%. But moving on to Infosys then, and Rima is joining in to tell us what is the street expecting from the second largest IT company in the country. Rima.
Thanks so much for that. So we're expecting growth better than TCS, but not as strong as HCL Tech. So constant currency revenue growth is seen closer to 1%, while dollar revenue growth is seen flat. Margins are seen expanding slightly to 21.3%, and this will drive a modest 3.5-4% jump in the company's profitability on a quarter-on-quarter basis. But what the street will watch closely will be the FY25 guidance. Now, the current guidance stands at 3.75 to 4.5% in constant currency revenues for the full year. Now, given the performance in the first half of the year, it's widely expected that the lower end for sure will be raised. But the question is, do they raise the upper end of the guidance, which is 4.75? Do they get that up to 5.5%? 5 may be priced in, 5.5 perhaps will excite the street. Margin guidance is likely to be maintained at 20 to 22%. Now, what will you watch? Well, commentary, because so far the commentary from either a TCS, HCL Tech, or even an L&T Technology all point to the discretionary demand situation improving, being better than what it was 3 months ago. TCS came out and categorically said FY26 is going to be better than FY25. For a company like LTTS, the deal wins were the largest ever, especially the large deal wins. For Infy in particular, watch for the wage hike timing and the implications, and then commentary on BFS, retail, and other important verticals. Back to you.
All right, Rima, thanks a lot for that. Before we take that short break, just keep an eye on Bharat Dynamics. Quite a bazooka move taking place out there, pun intended, because they've gotten an order worth nearly 3,000 crores coming in from the Defence Ministry for surface-to-air missiles, and that's exactly what the stock has done as well. From surface to air is where it is, up almost 7% We need to get the modalities of this contract back as well. Was it an old order that has now been, reopened, or is it a contract which is a fresh contract which has been signed? What is the delivery period, etc.? Nevertheless, the amount is something that the street likes, and the stock already had been beaten down. All the defense stocks had come off the highs, but now at lower levels, maybe there is some buying on account of these order wins that do come intermittently. But another stock which is also seeing bazooka move is Aeroflex Industries. What we'll do is take a short break, come back on the other side. Asad Daud, who's the MD of the company, joins in to discuss their third quarter performance.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. from decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
Welcome back. As promised, to get to the management of Aeroflex Industries now, and that is having a very, very good day today on the back of its strong performance in the quarter gone by. Now, to discuss the road ahead for the company, we are now being joined by Asad Daud, who is the MD of the company. Asad, good afternoon. Thank you for joining in, and congratulations on a quarter that has been good for your company. Now, if the last time you spoke to us, you had mentioned that there will be a 20 to 25% revenue growth in FY25. And you said this despite only the 10% growth that you had seen in the first half. Now, with this performance, do you expect this guidance to be met, and how is the fourth quarter shaping up as well?
So yes, so if you see in terms of our growth in terms of our revenue for the 9 months has been almost close to 20% now. But our focus has been on growth in the bottom line. So if you see our EBITDA margins, they have grown by 25% on a year-on-year basis, and our PAT has grown by about 30%. So for this entire financial year, we expect our EBITDA margins to grow over a period of the 1 year to about 25 to 30%. So we are in line with reaching our objectives and our target in terms of our EBITDA margins.
So what you're saying is that EBITDA margins will be 24 to 25% in the fourth quarter?
In terms of the growth, as compared to last year, we'll be...
Okay, so you're talking about EBITDA growth, not margins.
Growth, yeah.
Got it.
Not margins.
Yeah. Okay, and revenue, where will it be? 20 or 25%? Or you think it'll be between 18 to 20%? For the full year?
I think if you see from a full year perspective, I think it will be in the range of about 18 to 20%. But our focus, like I said, would be on growing our bottom line much faster as compared to our top line.
So could you give us then guidance on your margins? Because the first 9 months of this year, your margins have seen an improvement of nearly 140 basis points, or rather, a little around 140 basis points, from 19.7% to about 21.1%.
Yeah, so we would be hoping to end the year at our EBITDA margins anywhere between 21.5% to 22%.
Okay, 21.5% to 22%. Now, tell us a little about business itself, because this quarter, when we see a lot of growth, most of it is coming from domestic itself. I remember you had earlier told us that, there is some problem with global supply chain and global demand itself, and that impacted your performance in the previous quarter. How are things shaping up out there going forward? What's the kind of growth split that you're looking at in US, Europe, and India?
So, yes, in terms of the growth in this particular quarter, the growth from the domestic market has been much more. But also, if you see the growth in the exports, so as compared to the same quarter of last year, our exports have also grown. Obviously, they have not grown in the same percentage as compared to the domestic market, but yet export has grown. The major growth in the export has come from the USA market, which continues to be our major thrust. Europe is a market which is which is still not shown the kind of growth that we are looking at. Hopefully, if the war comes to an end over the next few months, then I think from the next financial year onwards, I think we'll also see some growth in the European market as well.
How much does Europe contribute, Asad? And is war the only deterrent why business in Europe had been slow?
So Europe currently contributes about 20 to 25% of our overall sales. So, which is a significant contributor. So the war has been, one of the reasons where the overall economy of Europe has seen a bit of a slowdown. Although I'll say that we have not seen degrowth in Europe, but the kind of growth that we were expecting from the European region, that has not yet materialized. So hopefully, I think in the next financial year onwards, I'll see, we are hoping that Europe can see that kind of growth that we are seeing both in the India market and in the USA market.
Could you give us a couple of more details? In the third quarter, what was the volume/value breakup? And secondly, in December, you had another plant which was likely to come on stream, the expansion of SS flexible hoses. We wanted to understand whether that has come on stream and what kind of orders are you expecting for this facility? Do you have some in your hand? And if you could give us some early indications of what FY26 looks like on account of revenue and margins.
So yes, in terms of our expansion of capacity from 15 million to 16.5 million meters has been commissioned. We have also started the production of metallic bellows at a new facility which was dedicated to the manufacturing of metallic bellows. That has also started now, from this month onwards. And if we talk about in terms of our growth, so we have seen a significant portion of the business actually come from the assembly section, which has been the thrust for the company over the last few quarters. And we expect that over the next few quarters and for the next few years as well, our focus would be to grow our assembly business, which definitely has much better margins as compared to our flexible hose business.
So what does that mean in terms of your expectations for FY26 and FY27 on both revenue and margins?
So in terms of the expectation for the next financial year, I think it will be in the same lines as compared to this financial year. Although we will have a new product segment, there will be added on, which is specifically metal bellows. We are expecting that the growth in FY26 would be actually much better than as compared to say FY25. So that.
What about the fundraising, Asad? You had last month approved a QIP, 400 crore rupees through a QIP. Is there a timeline that you could share for us on that? And how do you plan on utilizing these funds?
Obviously, before we plan to take the QIP forward, I think our aim at the company is to professionalize the management, and hence we have onboarded a new COO who will be joining from the 1st of February. And with regards to the QIP, I think the final amount and the utilization of the funds is still under discussion at the management level and also at the board level. So probably once it is finalized, then I'll be able to share with you the approximate timelines and the utilization of the proceeds. So till that time, I think I will not be able to share much information. Our focus is to grow our team, and hence the reason why we are now planning to become a more multinational company, and hence we have we have got on board Mr. Kagalkar, who will be our CEO of the company, to take our company to a global scale.
No, we understand that point. If you could just quickly tell us, obviously you can't give us the exact time, but typically how long does it take for you to, get this board resolution of the QIP and launching that QIP itself? How long should, investors wait for? 2-3 months, 4 months? You have some clarity then?
So, ideally we'll be looking to get the same, by the Q1 of the next financial year, or earlier if possible. But obviously, there are some detailings to be finalized and completed, and obviously the timing of the QIP also has to consider the market scenario and the market conditions as well. So we'll consider all of the things in perspective and then launch our QIP.
We take that point entirely, largely because it's a big amount. It's not a small amount. You're raising up to 400 crores, and your first 9 months revenues have been close to around 284 crores. So if you annualize that, you're raising almost as much as your annual revenue. So to that extent, what you do with those funds will be very important for the street to know. Organic opportunities, if at all you're looking at, if you're looking at inorganic growth also, the amount that you put in from the money that you raise in the QIP will have to have some bearing on your turnover, asset turnover, either via inorganic or organic route. So do you have an ambition here with 400 crore investments? How much are you looking at to scale up your revenue over the next 4, 5, 6 years or something?
So, in terms of our organic expansion or our capacity expansion, I think that for the next 1 year, we plan to do it from our internal accruals. Now, with regards to the QIP, we have plans for inorganic acquisitions as well. And like a significant portion of the QIP would be utilized for that purpose as well. And hence, we are, in discussions with regards, obviously, we are looking at opportunities for inorganic acquisitions, and I think the QIP would also be utilized for that particular aspect. And obviously, the QIP is being raised, with a high with a vision of that the funds would be required for the next 2 to 3 years. So it will help us to reach a target of 1,000 crores over the next 3 to 4 years.
So 3 to 4 years, 1,000 crore is your top line ambition via organic and inorganic. The way you are talking and the clarity that you have in your head, it so appears that you have an asset in mind already. You're talking to someone. If you could give us a sense of, what are we looking at? Is it a similar business as yours? Is it similar category? You're bringing on new capabilities. What could potentially be the size in terms of revenue of the asset that you're looking at? And by when can we hear about the closure of this deal, if at all?
So, right now we are in talks. It is at a very early stage, so it will be difficult for me to comment anything in terms of the opportunity or the company or the size of the business. I think obviously once anything is finalized, then we'll be able to discuss on the same. And the opportunities that we are looking at is not only in India, but we are also exploring the opportunities in the international market, especially in the USA and in the European region, which will help us to scale our business in those particular countries. So we are exploring a lot of opportunities right now, and nothing has been finalized as yet. And once anything is towards the stage of closure, we'll be able to share more details.
All right, Asad, thank you so much for joining in. Wish you good luck for the road ahead and, of course, for that potential acquisition that you have in mind.
You promised to join us as soon as you have some clarity on that acquisition, right?
Yes, I'll do for sure.
This is US or Europe?
No, so there are multiple, talks are going on. So,
Not India for sure.
Maybe India also, I don't
there are multiple on the table, but Asad Daud will join us as soon as any acquisition is completed. He's confirmed this to us on air. Asad, thank you so much for sparing time and joining in. The management there of Aeroflex Industries, the stock in a 20% circuit. Take a short break, back with the markets. Aditya Agarwala of Invest for Edu joins us on the other side. Stay tuned.
Welcome back. You're watching us here on Halftime Report. Perfect time to get you what's taking place in the F&O space. There have been some improvements in the way the indices have performed over the last couple of trading sessions. The Nifty is sitting with a gain of almost 100 points. Essentially, there is mid-cap index is doing well as well. So, over the last few trading sessions, we've been talking about how the indices have been making lower highs. But the last 3 trading sessions, the indices have been making higher highs, and that's a positive. Apart from that, the mid-cap index, what a smart bounce back it has had. From Monday's close, where the mid-cap index saw a 4.5% fall, it's up 4.2%, where the Nifty and Nifty Bank are up 1.3% itself. So the gains being led by the banks and the mid-cap index itself. Hormaz, you remember, we've been talking about the iron condor strategy in options trading, where you sell calls and puts of the same strike, and then you buy the wings on the other side as well to protect yourself. That's taking place at 23,300. The call out here is 13 odd rupees. You pull up the 23,300 put as well. You will see that is about 30 odd rupees. You sell it for about 50 rupees net. You are hoping for a range between 23,250 and 23,300, because that's where the hedges have been bought. 23,250 put and 23,350 call. So short point that I'm trying to say is option writers for this Thursday are positioned for a Nifty expiry between 23,250 at the lower level to 23,350 at the upper level itself. A lot of long positions added on India Mart and some shorts added on Trent after that up move that we saw in yesterday's trading session as well.
Indeed, and an interesting one at that. I'm sitting next to you. I will have learned about irons and butterflies and everything possible. I may not understand the strategies, but I do remember what's happening. Aditya Agarwala of Invest for Edu is also joining in. Aditya, good afternoon. Thank you for joining in. If this bounce sustains or not is questionable, but are there any stocks that you are recommending to your clients this afternoon?
Oh, absolutely. Hi, Orbers. Good afternoon. Hi, Manglam. Good afternoon. Thanks for having the show. I've got a couple of high recommendations because the undertone is still strong. So, Bharti Airtel is the first pick from my side. both on the long side, the stocks. So for a target of 1760 with a stop loss at 1560, I have a buy recommendation of Bharti Airtel. It's breaking out of a narrow consolidation zone, so I think the uptrend will continue here. The second is City Union Bank. Again, this is one stock which has withheld massive correction in the banking stocks. I see positive harmonics, bullish harmonics in the stock, and has taken support at key Fibonacci retracement levels. So at current levels, I'm a buyer in City Union Bank for a target of 182 on the upside, with a stop loss at 166 on the downside.
Take that point. Thank you so much, Aditya, for joining in. Short interaction, but we got all that we need to from you when it comes to stocks. Take a short break. On the other side, we talk about CEAT, which is reacting to its third quarter earnings. On the downside, we'll tell you why.
Back with us here on Halftime Report. There are plenty of losers in the broader markets, even though the mid-cap and the small-cap indices are continuing to be near the highest point of the day. Kalyan Jewellers is one of them. Another 4.5% down today. 9 out of the last 10 trading sessions in the red now for the stock. And mind you, the stock is in the F&O ban today, so no new positions on the stock. So 4.75% lower for Kalyan Jewellers. The other one that's not doing well, though, is CEAT, and that is reacting to its third quarter results. Sudarshan is here with the earnings fine print. Sudarshan.
So earnings for Q3 by CEAT are muted but largely in line with what brokerages were estimating. Nevertheless, revenue has increased 12% year-on-year, but sharp increase in raw material cost had a drag on EBITDA and margin. Raw material cost has increased to 63% against 57% that company had seen the last quarter, and it's up more than 440 bips year-on-year and almost 70 bips sequentially, and that led to margin falling to 10.4%. That is down nearly 400 bips year-on-year. But talking about the earnings and the outlook, company says it has witnessed double-digit year-on-year growth, and it was driven by replacement segment. On demand front, it says it remains stable, and going forward, it says that order book remains strong, and going in the Q4, as of now, raw material cost remains stable. That might help in the earnings for Q4. And apart from the earnings, company has also increased the capacity addition for Nagpur unit. It's going to increase the capacity by 30%, and that's going to be completed by FY28. And investment for this would be total rupees 400 crore, and that will be funded via internal accruals and debts. But on the earnings front, it's muted but largely in line, and that's the reason you might have seen a minor recovery from lows.
Indeed, Sudarshan, thanks a lot for that. Keep an eye out on CEAT as the day goes by as well. But with that, it's a wrap on this edition of Halftime Report. Mangalam and I leave you with the Nifty at the highest point of the day now. 23,320 is where the index is. 350-point gain on the Sensex as well. From the team that put this show together, thank you so much for watching. Business Lunch for the next 30 minutes.